Great. Thank you for joining us today for our webinar on navigating alternative financial services and products. My name is Michael Rausch, and I am with the National Disability Institute, where I'm the Manager of Financial Empowerment and Innovation. Today, I'm joined by Tanya Landau, Manager of Advisory Services at the Center for Financial Services Innovation, and Brenton Peck, who's also with Advisory Services for the Center for Financial Services Innovation. Before we get started, we do have a few webinar housekeeping tips to go over, and I'd like to introduce my colleague, Nakia Matthews, who will go over these details with us. Nakia?
Good afternoon, everyone. The audio for today's webinar is being broadcast through your computer. Please make sure that your speakers are turned on or your headphones are plugged in. You can control the audio broadcast via the audio broadcast panel, which you see below. And if you accidentally close this panel, you can reopen it from the top menu, Communicate, and choosing Join Audio Broadcast. If you do not have sound capabilities on your computer or you prefer to listen by phone, you can dial the number you see here, the toll-free number, and you can enter this meeting code. You do not need to enter an attendee ID, and I will paste this number and code into the chat box for those who are currently not able to dial the number. Real-time captioning is provided during this webinar. The captions can be found in the Media Viewer panel, which appears in the lower right corner of your platform, the webinar platform, excuse me. If you'd like to make the Media Viewer panel larger, you can do so by minimizing some of the other panels like Chat, Q&A, and Participants. And conversely, if you do not need the captions, you can minimize the Media Viewer panel. We will have a question and answer portion at the end of today's webinar. Please use the chat box or the Q&A box to send any questions that you may have during the course of the webinar to either myself or Michael Rausch. Myself or Michael Rausch, and we will direct the questions accordingly at the end of the webinar. If you are listening by phone and not logged into the webinar, you may also ask questions by emailing Michael directly at mrausch@ndi-inc.org. Please note that this webinar is being recorded and that the materials will be placed on the NDI website at realeconomicimpact.org. If you experience any technical difficulties during the webinar, please use the chat box to send me a message, or you may also email me directly at nmatthews@ndi-inc.org.
Great, thank you, Nakia. So today's webinar is about having a conversation on effective strategies in navigating the wide variety of alternative financial services and products. During the webinar, we will define and highlight these financial services and offer examples of these products. We will also explore prepaid debit cards and tools that are connected to prepaid cards to help individuals build their financial health. After today's webinar, we hope that each of you will have a better understanding of defining financial services, defining prepaid debit cards, identifying appropriate and affordable financial products and services for the individuals you work with, as well as identify strategies for using these products and services to help improve the financial health of persons with disabilities. I would like to thank our sponsors for their support of our webinar series. I'd like to thank Walmart, Bank of America, Accorda Therapeutics, the Burton Blatt Institute, and the Internal Revenue Service. Before we get started, for those of you who are new to the National Disability Institute, I'd like to share with you information on our organization. The National Disability Institute is a national nonprofit organization dedicated to building a better economic future for Americans with disabilities. We are the first national organization committed exclusively to championing economic empowerment, asset development, and financial stability for all persons across the full spectrum of disabilities. The National Disability Institute affects change through public education, measures. To learn more about the National Disability Institute, please go to www.realeconomicimpact.org. To join the conversation on building a better economic future for persons with disabilities, we encourage you to join the National Disability Institute's Real Economic Impact Network. The REI Network is an alliance of organizations and individuals dedicated to advancing the economic empowerment of people with disabilities. It consists of more than 900 partners in more than 100 cities across the country. It includes nonprofit, community tax coalitions, asset development organizations, financial education initiatives, corporations, private sector businesses, federal, state, and local government, and individuals and their families. And all partners are joining together to embrace, promote, and pursue access to and inclusion of people with disabilities. Today, we're fortunate to have Tanya Ladhow, with Manager of Advisory Services, the Center for Financial Services Innovation, and Brenton Peck, who are going to come and share with us information on how we navigate non-traditional financial services and products. With that, I'm going to turn it over to Tanya. Tanya?
Great. Thank you so much, Michael. Good afternoon, everyone. Brenton and myself are thrilled to be here and to have been invited by Michael and his team to share some of our knowledge and our research with all of you around alternative and non-traditional financial products and services, with a specific focus on prepaid. Just working out the ability to scroll forward.
There you go. You got it.
Yep. So for those of you that may not be familiar with the CFSI, who we are and what we do, I just wanted to quickly go over kind of an overview of who we are. We are the nation's leading authority on consumer financial health. We lead a network of financial services innovators and providers that are committed to better consumer products and practices. We have 4 different lines of business in which we accomplish this. We connect folks. We host a series of convenings throughout the year of different sized providers, different types of providers, really fostering dialogue and collaboration. We have a robust research arm in New York, primarily, insights and analytics that really provide the deep consumer insights that we use in different lines of work, that some of which we'll be sharing with you today. We have an innovations lab. Some of you might have seen recently the launch of that. We're really excited to kind of turn the work we've been doing in the innovation space for years into something a little bit more formal and of larger size. So we seed and spur new promising ideas within the financial health and financial services field. And we also advise. So Brenton and I sit on our advisory services team, where we offer consulting services and technical assistance services to both for-profit and nonprofit financial service providers. Quick run through of our agenda today. I want to just start with kind of framing the idea of financial health. I think that this term is becoming more popular, but is still, emerging a little bit. There's a lot of language around the underserved, the underbanked, the unbanked, and we're really trying to move towards financial health. So I want to spend some time talking about how we at CFSI are looking at that, then kind of move into an overview of consumer challenges and this marketplace as a whole to just get a sense of how people are transacting, where people are going, what kind of pain points they're facing. Then we're going to focus in, like we mentioned, on prepaid specifically, really just do kind of a landscape analysis, what's out there, what does the product do, what are the functionalities and different features, and then we will take questions. So like I said, we're going to start with financial health. Financial health really is a bridging of kind of the immediate short-term needs of a consumer and the long-term needs of a consumer. So the day-to-day financial system of any particular individual needs to be functioning well, needs to serve the actual kind of financial demands that that person faces on a day-to-day basis, but at the same time be the foundation and set up that particular consumer for long-term financial resilience and opportunity. So the way we're looking at this now, kind of rather than from an underserved market, is really like, how do we achieve stability, health, and kind of overall economic empowerment for the consumer. Financial health matters in a variety of ways, and CFSI has long prided itself on really creating kind of win-win situations in the financial services space. We really want to create products and design services that are beneficial to the consumer, but also motivate the provider to continue offering it, to broaden their target. So we really always are trying to look for the kind of mutual beneficial outcome for both consumers and providers, and financial health is no different. So starting with the individuals, their communities, their country, really financial health is necessary for really succeeding in any other part of one's life, mental and physical health, family stability, education. It's necessary for upward financial mobility, again, this idea of kind of long-term planning and stability. And then it just kind of has a positive trickle effect in communities, economic, local economies, regional, national. And then again, like I said, for the financial provider, there is really incentive to provide appropriate products and services for this often overlooked target. There's long-term revenue potential, there's increased loyalty from the customers, and there's new opportunities for engagement. We're going to move now to the actual marketplace. We're going to size it, talk about demographics, key trends, with also specific focus on the persons with disability population. So this is a somewhat startling kind of slide if you aren't really familiar with all of the facets of what makes up this, what we call the underserved marketplace. So what we've done here is collect and quantify all the fees and interest that consumers who are unbanked, underbanked, or underserved are spending. We've categorized it into different types of transactions and behaviors. Starting from the left, we have very short-term credit, which is typically over 30 days, payments, deposits, and others. And you'll see there's just an obvious leader in the number of fees being charged for short-term credit, which we'll get to later. But we're talking about almost $100 billion in fees and interest in this market. So again, from the financial provider perspective, there's a huge appetite here for revenue generation, and from the consumer side, there really is just an exorbitant amount wasted on fees and interest unnecessarily. Demographically, we'll go through this quickly, about a quarter of all U.S. households are financially underserved, and that's combining both unbanked and underbanked, which underbanked is defined as having a bank account, whether checking or savings, but using an alternative financial service sometime within the last year. You'll see in the upper right there, we broke it down by ethnicity, and then in the bottom, we have broke it down by income. And just for, I'm sure you will get this question a lot, so from the front end, I'd like to say that this presentation will be sent out in a PDF form, so you don't have to worry about scrambling to take notes. All of this you'll have access to as a participant. So I'm sure most of the people on this call are aware of the financial capability of adults with disabilities report that NDI just published, I think it was last month, a really brilliant report sourced from the FINRA consumer, I'm not sure exactly what it was called, financial capability or stability survey. So we just wanted to point out a couple of things here that we found striking within the report as we talk about financial services for the underserved and specifically with the disability population. So we have about 75% of the disability population making less than $35,000 a year, compared to just about half that with the non-disabled populations. That's a really striking number, something we really want to keep in mind. The dollars that are being made need to be spent carefully and budgeted and shouldn't be wasted on fees, interest, those kinds of things. The dollars that are made need to be really consciously kind of doled out. No surprise that on those incomes, covering monthly expenses is somewhat or very difficult. Just also wanting to do a comparison between disability and non-disability populations. We have 3/4, again, the same amount that is under $35,000 annual income that have very or some difficulty covering monthly expenses. Satisfaction with financial condition, again, as you might imagine, 70% of the disabled population is somewhat or very dissatisfied compared to just 59% of the non-disabled population. Again, I appreciate that this audience is probably aware of these distinctions, but just as we kind of move into our general conversation, setting the stage here, I just want to frame that distinction and keep it top of mind for us. So what is the what that we're talking about here? So financial services, we're going to take a deep dive into these 4 areas of challenges that CFSI uses to kind of categorize a consumer's life and talk a little bit about the realities and some of the products and some of the trends and behaviors within each one before we hit the section on prepaid. So most basically, all consumers need to transact. Every day we all transact. We buy things, we save money, we hopefully are making some money, we might be borrowing money, all of those things. It's just kind of the day-to-day financial transactions. And as we've seen, there's a lot of folks that either are not using banks at all or have a bank account but don't use it for the totality of their transactions. So this is just a quick kind of rundown of some of the very common themes we hear from consumers who are not at a bank, and there's many different reasons, but these are the 3 that tend to repeat themselves. So one, a lot of people feel that whether, perceived or real, don't have the money to make an account useful. There's a lot of minimum balance requirements. There's different types of requirements that make people feel a little intimidated or, lacking the funds to make it useful. Tied to that, accounts are costly. There's often, just monthly holding fees, not to mention overdraft fees or check cashing fees, any kind of fees associated with it. A lot of people have a very negative perception about bank fees and try to stay away from those. And then a general just lack of trust in banks. We see this often with the immigrant community, but also the domestic population might have felt slighted or overcharged or, had some kind of negative experience with a bank and therefore don't trust something as important as their money in those institutions. So where are people going? They have to be transacting, right? So you'll see that bottom line, there are a lot of people going to banks, right? But there are just more and more options and alternatives for this particular consumer. And we're really evolving from the days of these kind of shady pawn shops or payday loans. You'll see that both those numbers are really low, can't get much lower than 0%. So, folks like Walgreens, folks like Kroger's, folks, just grocery stores or convenience stores, department stores, they're starting to realize that this consumer is frequenting their establishment on a daily basis, so are starting to offer some of the products and services that meet not only their daily needs but financial needs. So we're really seeing an exciting evolution of options in the alternative financial kind of product space landscape. We're going to move now to savings. So this is an interesting topic, and it takes a couple of different shades, and I know I only have a few minutes. We could talk for an hour about this alone, but you're probably wondering, with the kind of lower incomes and a lot of money spent on fees, how people think about savings. So, the primary reason to save for all of us is to cope with any kind of financial shock or surprise that might come up. However, coming up with the $2,000, which is, a regularly used amount to, weather some kind of financial storm, half of Americans are unable to come up with that much money in 30 days. So I mean, it's startling. The incentive is there, but the ability, at least the perceived ability to do so, isn't matching up. 62% of households with no emergency savings indicated that they would be able to save $25 a month. So again, with this idea in mind of financial products and services that are appropriate to the needs of a variety of consumers, if there's this feeling of an ability to save $25 a month, then maybe given the right product or being exposed to the right service of budgeting or, set it, forget it type methods, that could really improve a consumer's ability to save and then, be able to weather some kind of storm, which leads to our next challenge of borrowing. So there's different types of borrowing. We all know credit can be good. There can be, kind of a history established. Oftentimes with big purchases, the cash doesn't make that much sense. But the type of borrowing we're talking about with this particular consumer is short-term, small dollar credit. Most of the time, I encourage you to think back to that first column where we sized the market and just the $50 billion of fees and interest that are going to short-term credit. So who are these small dollar short-term credit consumers? We've estimated that there's about 15 million Americans that are small dollar credit consumers. We've highlighted a couple interesting demographics among the populations that are primarily using these products. We have about 60% of small dollar credit consumers that have less than a high school diploma versus 45% of non-small dollar credit consumers. Regionally, half of them live in the South, so that's very telling. I am actually originally from Texas and know that the payday loan business there, it's a little bit like the Wild West. It really has become an anchor for a lot of that industry. The regulations and the laws are a little bit looser down south. Household size is typically a little bit bigger for this consumer than for a non-small dollar credit consumer. And then there's several other statistics here that I encourage you to take a look at when we send this out. So why was there a fund shortage? We saw that 1 out of 2 Americans are unable to save $2,000 in 30 days. And so there's several reasons why. The few that I want to point out on top here, we have this idea of income volatility. A lot of times the income of these types of households is not predictable. It's not a biweekly kind of standardized rate. It's an hourly, it's an overtime, there's just a lot of fluctuation in income, which doesn't always match with when bills or expenses are due. So there's kind of a cash flow problem that, a lot of folks are trying to think about how different income smoothing techniques might be able to address this and decrease the need for small dollar credit in this instance. This second one, unexpected expenses, again, comes down to budgeting, saving appropriately. And with the savings, I don't know if I mentioned it when we talked about it, but there's 2 ways that I want people to be thinking about savings too. There's the habit of savings, and then there's a dollar amount or a goal of savings. So I think behaviorally and kind of motivationally, both of those types of savings require different catalysts and incentives, but maybe you can't get to the $2,000 in 30 days, but having a habit of savings that helps you, fill up your tank of gas every 2 weeks, it's beneficial also. It's just 2 different types. But the budgeting issue with the right products or services could be improved. And then the second to last one I find interesting too. I spent most of my money that month on paying a previous loan. So if there was access to the appropriate or relevant, responsible credit product, they might not find themselves in this position. There's a saying that there's no bad borrowers, there's bad products for the borrower. So that's just another, reason that we're, working so hard to get the right products and services into the hands of this consumer. And lastly, on the savings issue, we took a look at other resources that are available to meet the need for this access to credit. So credit cards, overdraft, loans from friends and family, those are all other options if somebody needs cash quickly. But when we surveyed folks, there was a variety of reasons that those options weren't used. I won't go through all of them, but a couple that are interesting are, credit cards are too expensive. And in the long run, I think most of us know that most payday loans are much more expensive than credit cards. So it's an interesting kind of short-term versus long-term way of thinking about it. To the right here, there are folks that are using small dollar credit that do have savings, but chose not to use it. I mean, it's a very small group, but 66% didn't have savings. So again, if we had the right products, the right services to help budget, to help build savings, we might be able to mitigate the need for this short-term credit, which is typically outrageously expensive. Lastly, I want to talk about the fourth challenge, which is planning. And again, thinking about the financial health framework that we started with in the beginning, financial planning for both short-term and long-term goals. So again, health really is about the day-to-day, but also long-term thinking, and long-term thinking requires planning. So our financial diaries, it's a multi-year research project where we go into the homes of different families all around the country, and I think there's 4 main areas of the country, and really dig deep into the day-to-day habits, incomes, expenses, outflows, cash flows of consumers to really track this behavior. And of the folks that have participated in the financial diaries, we did a really kind of rough outline of budgeting methods. And you'll see that it's somewhat of an even split, but 40% do it mentally. And I mean, it's just, financial lives are in some ways just too complex to be doing mentally. Paper and computer, that's definitely the preferable of these 3, and then not at all, which is obviously troublesome. You can't be planning if you don't have some kind of budget method, and then when shocks and storms do appear, you won't be as prepared as you might be if you had some kind of budget or some kind of plan. Again, the income volatility, we see this quite a bit in this consumer base, and just want to point out here that almost a quarter of households have unsteady weekly income, which of course does make budgeting a challenge, but does not make it impossible. There's still different types of tools and resources out there for all kinds of income inflows and cash flows, but this is a serious issue, and we certainly try to encourage providers of products to think about ways in which their resources can address some of these income volatility, cash flow needs. So this wraps up the section on the underserved market, on the demographic and the kind of financial services that are used, divided by challenges, how we think about it. So I'm going to turn it over to Brenton right now, and he's going to do a little bit of a deeper dive into GPR, or General Purpose Reloadable Prepaid Cards.
Thanks, Tanya. Hello, everybody. So we'll take about the next 10 minutes or so taking a deeper dive into General Purpose Reloadable Prepaid Cards, more commonly called GPR cards. We'll discuss a little bit about the features that they have, the consumer appeal, what is it, why are people taking them out, and then some of the trends or the next wave of this product. As a reminder, please send in your questions along the way. After this segment, we'll have about 10 minutes or so left, and we'll be addressing some of the questions that come through the chatter feed. So GPR cards have a lot of really neat, very innovative features that are taking it to the next level. But just as a basis for our discussion, what is it? You probably hear the term often. You might hear some advertisements from American Express or Chase. Really what a prepaid card is it's an alternative to a traditional bank account, a traditional checking account. It's an opportunity to provide a platform to a consumer who can load funds onto an account, typically either in the form of check or cash, or they can do a transfer of funds between the card and their bank account. Walmart is a big provider that comes to mind, where many of the GPR cards on the market, consumers can take right up to a register and load funds onto them. The nice thing about these products is that there are no credit checks. So virtually anybody across the country, regardless of past behavior, qualifies for one of these products. There's no overdraft fees. You only spend what you load onto the card. You can typically never go below zero. You receive statements and have FDIC coverage. Why that's relevant is because you can load Social Security benefits, SSI. You can take any government benefits and load them directly onto this card. They offer direct deposit, which provides consumers with immediate availability, and they're low cost. They're a lot lower cost for the low to moderate income population compared to a traditional checking account where you may be paying overdraft fees or monthly service fees, or you're required to act a certain way. As the industry has evolved over the last 10 years or so, more and more providers are popping up. So there are direct-to-consumer GPR providers. You can purchase off of a JPEG in your local Walgreens or Walmart, a reloadable card, and you can go to many of the traditional financial services institutions and ask a banker for a GPR card as well. Today, consumers are choosing to have a GPR prepaid card over a traditional bank account. This is for a variety of reasons. The first of which is money management. It's a lot easier to understand a budget and only spend what you actually have if you have this product, opposed to one that gives you the flexibility or the opportunity to spend more than you actually have. The second point is that it provides security. Many times people who are cash transactors are referred to as walking ATMs, and if they lose the money that they have to their name, it's gone. It's not insured by anything. There's no recourse. Whereas having it on a piece of plastic like a GPR card provides that safety net and is run through a bank. So similar to a debit card or credit card, you can call your provider and typically dispute through that actual provider, opposed to flying blind. Many employers now are asking to, or are requiring, that employees have a place to directly deposit their paycheck or their income onto. If consumers don't have a traditional bank account, this provides a nice option for them, so it starts to speak to that fully functional type of platform build out. You have purchase power. I stayed in a hotel last week. I bought an airline ticket last month. I wouldn't be able to unless I had a 16-digit account number. Those without a credit card or without a debit card are still able to book these type of things, as well as use at point of sale by simply having that form of plastic. You build good habits having these guardrails in place. So it's a tool that teaches responsibility and teaches better financial habits, because there is safety. You're saving yourself from yourself if you have the right guardrails in place. And lastly, people are choosing these as a form of youth distribution. So it's a nice way to ease the younger crowd into financial management and help them learn how to budget through a safer product than a checking account that may cause a lot of fees and pain down the line. So the numbers are telling. More consumers are using prepaid cards for greater purposes. They're loading more money onto them. They're keeping the cards longer. They're thinking about the product beyond just having it used as a gift card. They're making a conscious decision and opting in for this product. So as you can see by some of the stats, the first in particular is nice. It's consumer prepaid usage rose about 18% and will continue to grow. It's particularly attractive to the underserved or low-income community because of the guardrails that we explained. Continuing on, GPR cards are growing at a tremendous rate. There's an estimate that over the next 5 years, the industry as a whole is going to grow at over 5% compounding each year. In fact, over the last 3 years, ownership of the product has risen over 71%. And this is due to more industry players, faster processing time, and a general understanding of what this product is. 5 years ago, there used to be a perception of prepaid cards and prepaid consumers. People would bucket them into the similar category of those who go to a check casher or those who take out a payday loan. That's not the case anymore. Cards are used by a number of different people in all sorts of demographics. Actually, about 13% today of U.S. adults have this type of product. There are 2 examples that really show the evolution of prepaid cards. Simple is the first, which you'll see on the left side of the screen. And Simple is actually a bank account. It's a bank account run through BBVA, which used to be Bancorp. It was acquired for $8 million a few months ago, but it's a bank account that's actually disguised as a prepaid card, and it does exactly what the title would suggest. It makes things simple. But it also builds in a lot of the financial management tools that many traditional banks, in particular the smaller ones, aren't able to provide the consumer base. GoBank is another really interesting example, which you'll see on the right-hand side. So GoBank is the definition of a consumer-centric approach. They actually won't charge consumers a fee to have the account unless consumers say, you should be charging me a fee to have the account because you're providing so much value. Similar to Simple, they provide money management tools, but also allow you to make free and easy deposit regardless of the channel you select. So they're going to where the customer is. They're making the features as appealing as any bank account that you'll find, and by providing this option for consumers who may not want a DDA or a checking account, this provides a great value. So there's a lot that are out there, many options, many providers of GPR cards. CFSI has developed guidelines that we use as a basis for determining what makes up a high-quality financial tool. I would encourage you, as you're thinking about ways to distribute or adopt these type of products, to keep these in mind and make sure that the providers who are out there are adhering to these type of guidelines. In fact, prepaid is such a hot topic that last year we came out with our Compass Guide to Prepaid, where we take our 4 main pillars that define high quality within financial services, and we applied it to one particular product, that being GPR Prepaid Cards. It's incredibly valuable to see how the industry has shaped out over the last couple of years, and where we believe the market is going in the near future. I'd encourage all the participants on the line to click on the links once these are sent out and reference both of these tools as you're thinking through the GPR prepaid market. So throughout the last 30 minutes or so, we presented many consumer challenges. We showcased what GPR prepaid cards are and gave you a sense of where it's going. In general, there is a lot of innovation that is happening with smaller institutions across the country to address these type of challenges, many of which involve activity or incentive-based schemes, and they are all economically justifiable once they're in play. So I'd encourage all to take a look and see some of the innovations that we've highlighted, but ultimately it falls on how do you change consumer financial behavior. So they've started to introduce the idea of behaviorally designed innovation or intervention within each of their models. There's a strong push for what we refer to as gamification, especially when you think about savings account and just the behavior of savings opposed to dollar amounts. There's ways that technology companies are thinking about consumers paying down their debt or managing their debt more appropriately by showcasing their entire financial picture and making sense of it all. from our perspective, there are a number of providers who are out there, many of which are partnered with some of the more traditional financial institutions that you know today. You'll start to see many more of these built out to address these particular challenges as the years go on. So to recap, there's a couple of key takeaways to keep in mind as you move forward to the next phase of your engagement in financial services. Disabled Americans struggle financially disproportionately to the amount of non-disabled Americans. And that's not just due to income or income volatility. It's due to the financial products that are available right now to the mass market and how those products are attained. Each consumer is unique, so there's a uniqueness to customer segments and needs. You can break it into different buckets, but the financially underserved are vulnerable. And the providers who understand this uniqueness and these particular challenges are the ones who are going to ultimately succeed. And finally, there is a lot of innovation that's happening, but there needs to be more, and there needs to be more at scale. And the bottom line with innovation is that it needs to be designed as a behaviorally innovative model that intervenes within a consumer's standard path. So it doesn't matter if you're looking at small dollar credit or day-to-day financial services. However, you can make greater sense of what a consumer is doing on a regular basis by intervening at the pivot point is how you're going to be successful as a financial services distributor or provider. Our contact information is available. At the end of the presentation, our contact information is available at CFSI. I'd encourage all, if you have follow-on questions that we don't get to today or you would like to know more about a particular topic or product, to just send Tanya or I an email, and we'll be more than happy to address those. But with that, we'll turn it back over to Michael.
I'll just make one final plug quickly for the Financial Capability Institute. It's an offshoot of CFSI in general and focuses on nonprofits specifically as financial services providers. You'll remember from the beginning of the presentation as I was describing what we do in our advisory services, we give consulting, we engage in consulting with both for-profit and nonprofit, and so we think that some of the challenges and opportunities that nonprofit financial services providers were unique enough to really its own kind of institute. I think that there is a lot of trust, there's a lot of touch points, there's a lot of exposure to exactly this consumer. So being able to integrate product and integrate service into some of these other social services that the nonprofit is delivering, again, is a win-win and looks a little bit different than for-profits. So you can go to our general website, cfsinnovation.com, and you can also check out resources here at financial-capability.org for a spectrum of the services that we provide. And again, let me just end on this presentation, which includes our contact information, our telephone numbers, emails. We're easy to get in touch with.
Great. Thank you so much for the information that you both shared. We do have a lot of questions, and so we're going to try and get through as many questions as we can. So to get started, one of the first questions that came in, Tanya, you had talked about the financial diaries. Where can we find more information on the financial diaries?
Yes, absolutely. I apologize, I don't know off the top of my head the exact web address. Let me find that.
It's actually www.usfinancialdiaries.org. We'll provide you with all the information. We make many of the case studies or household diaries available publicly. During the next 6 months, our associates at CFSI will actually be writing a book on all of the finding, including many of the data sets that aren't available right now. that is hopefully going to be released at the latter part of 2015, so keep your eyes open for that as well.
Great, thank you. I would just like to say that at the National Disability Institute, we utilize the information provided by the financial diaries and appreciate that CFSI and others have put that together. The next question is, if a person has a prepaid card, are they considered to be banked?
That's a really good question because it depends on which survey you look at. We often reference the FDIC survey in 2011 because they, at the time, had the most relevant definition of banked, unbanked, underbanked, and underserved. If you look there, the idea of banked is somebody who only uses the services of a bank account. They don't need to go to an alternative financial services provider. In the case of, say, a Chase Liquid prepaid card that is issued by a bank, even though it may not be a traditional form of day-to-day management, that person would still be considered a banked person. If it were in the case of, say, GoBank or a NetSpend prepaid card or one of the online providers who use the bank as a back channel, I would not consider that person banked. But regardless, the whole concept of banked, unbanked, underbanked seems to be blending together, which is how are people conducting their day-to-day transactional lives regardless of how you classify them. Very good question, though.
Great, thank you. Is there an age requirement to get a prepaid card? I think this question is asking, does an individual have to be 16 or older or 18 or older to be able to get a prepaid card on their own?
Yep, and that depends on the issuer. Typically, it's state-specific, which is 17 or 18 years old. At the same time, you can have what's called a companion card that's typically tied to a parent's card, where they would essentially be a joint owner on the prepaid card and then issue the product to a child or a minor with the same guardrails in place, or even sometimes open those up and have even spending limits on the funds that are available. It really does depend on the provider first and then the state in which it's issued.
Great, thank you. For persons who are homeless, do you have to have a government-issued ID to get a prepaid card? And do you have to have a mailing address?
Typically with a government-issued ID is required for prepaid cards. And in terms of having an address, I believe you do have to have some kind of mailing address or proof of residence. There might be, again, innovations in that field in terms of getting around that for people that are temporarily homeless. I'm not sure what those workarounds would be, but as it stands, yes.
Okay, great. The next, and this was in the presentation, but we'll ask it again. Are GPR cards similar to a card where wages are being paid to employees on a card?
Yes, they're very similar. In fact, the main difference between what's called a payroll card and a GPR card really has to do with regulations from the employer standpoint and certain, I don't know all the kind of technical details around that, but there's different, the card is regulated in a different way, but a lot of the features of the card are similar. You might be familiar with the news of Goodwill, who just launched a payroll card at 7 of its sites, and they've been working with NetSpend, and the payroll card that they chose and the terms that they negotiated for that card are very similar to GPR. So on the front end, it acts almost identically, and it's really on the back end and some of the more like regulatory, nitty-gritty aspects that differentiate the cards. And just as a kind of teaser, CFSI is currently working on a compass guide to payroll, And so we'll really be outlining the differences and really getting into the weeds of what distinguishes one card from the other, and then best practices for delivering and designing a high-quality payroll card. So we're hoping to publish something around that late 2014.
Great. Excuse me. If I receive, the next question is, if I receive my SSI on the prepaid card, can I choose to have it put on a prepaid card of my choice, or do I need to use SSA's Go Direct card?
No, that's a really good question, and as far as we understand to this point, you can put it on a GPR card of your choice. The main difference, and again, we haven't worked with that government card particularly, but the main differentiator is going to be what's called an open loop system versus a closed loop system. An open loop being you can add additional funds onto the card at your choosing. So as long as it's FDIC insured, you should be able to have SSI income deposited directly to that card. There would be particular instructions how to, or what routing number to use and what account number to use while setting that up. But as far as we understand at CFSI, there should be no restriction.
Great. What are the transactional fees for loading the card or using at a participating provider? And then the second part to the question asked is, how broad is the provider network? So I think, you know, how do individuals, you know, is there a central location that individuals can go to find out or to be able to compare the various fees to identify the card that's best for them?
Yep. Load fees are a hot topic, especially now that more and more banks, traditional banks, are diving into this market. Many of the providers have since limited their load fees, if not eliminated them altogether. You may have heard of Green Dot's Money Pack. That used to be a catch-all for many GPR cards. It would cover a lot of them that were in the market. It would cost $4.95. You can go to Walmart and put money on any card. Green Dot has since said publicly that they're looking to eliminate that product altogether because you shouldn't have to pay to use your money. Many of the providers that we talked about, the Simples, the GoBanks, the Chase Liquid, there will actually not be a load fee, and you can do that in the form of a check through mobile deposit. You can do that in the form of cash through some of the point-of-sale systems, and you can do that through a transfer through a traditional bank account. The provider network is vast. I'll make another plug for CFSI's Compass Guide to Prepaid, which outlines some of the major providers, pros and cons of each. I would also encourage you to look at bankrate.com, who paints a nice picture and breaks it down into particular consumer needs and then aligns which card will best address the needs of a particular individual. Those are the two sources that I would look to first.
Great. And this goes along with that question, but how do the fees associated with these cards compare to fees from banks?
So typically, and the numbers may be off nowadays by just a little bit, but typically over the course of a year, somebody who has a GPR prepaid card will pay anywhere between $45 and $68 to actually have the product, whereas a traditional bank account is anywhere between $110 and $132. So again, those numbers may have shifted a little bit, but in general, if you just take an overview of the market of what's available from a national bank, a mid-tier bank, and a community bank, and start to align what some of those products are with the features that you get, and do a similar analysis on some of the top prepaid providers, it's very apparent that the prepaid market will cost a consumer, especially a low-end consumer, less to hold those products than it would a traditional bank account.
Great. All right, we're going to take one more question. We have several questions that were unable to be answered, but we will send those to Tanya and to Brenton to be able to answer, and we'll send that out through our distribution list. But the last question is tax time seen as a good opportunity to encourage adoption of GPR cards for emergency savings? The second part of this is, are there any challenges or opportunities going forward for organizations already involved in financial education and capability building?
Okay, I'll take that first part of the question. Yes, we absolutely think that tax time is a great time for emergency savings building, primarily because for a lot of these consumers, that one lump sum of income can sometimes equal 10, 15, almost 20% of their annual income. So it's really the largest cash injection, income injection that this consumer is going to face, and leveraging and utilizing that moment is really critical. And we've done different work around this. Our Innovations Lab has actually tested different ways of kind of promoting success around this, not only offering the card right there at tax time, but then having additional features that meet the demands of this consumer, whether it's, text message alerts or financial coaching, really pairing the product with a kind of counseling or coaching piece, which is the root of our financial capability theory. The Financial Clinic, also out of New York, has an interesting program that they call the Now and Later program, and they use tax time as the kind of starting point for annual income smoothing. So it's kind of a saving while you spend. So rather than, I think there's some statistic around like 30 to 40% of tax refunds are spent before they're doled out. So in an effort to really kind of manage that income lump sum, working with the client and a coach to track and plan and budget different goals for the year and spend as needed. So some of those volatility spikes that we talked about earlier can be managed that way. But yeah, we certainly think that tax time, there's a lot of opportunity for working towards financial health for this consumer. I'm not sure I remember the second part of the question.
The second part was, are there any challenges or opportunities going forward for organizations already involved in financial education and capability building?
Just generally, or with CFSI? I'm not exactly sure what the root of that is, but I definitely encourage any folks that are already working in this space that haven't already visited our website, financial-capability.org. We have a host of tools and resources specifically for nonprofits that are either interested or already involved in this field. We have a self-assessment that we encourage all organizations, non and for-profit, to take to really gauge their readiness and capacity to take on a product integration program. I think that's a really great place to start. And additional questions or level of involvement, feel free to reach out to me. Again, my email is at the end of the slide, and we have a host of product offerings, consulting, technical assistance, and, just our time, if it's quick conversations, that we are happy to offer.
Great. All right, thank you. Once again, I'd like to thank Tanya and Brenton, for both participating today on our webinar to be able to share information on navigating financial services and products. So Brenton and Tanya, thank you both so much. I would like to remind everyone that on September 10th, we will be doing a webinar with the Robert Wood Johnson Foundation with their commission to build a healthier America. And earlier this year, they released a report on building healthy communities. And so we have a commissioner from the Robert Wood Johnson Foundation, as well as Elaine Arkin, who will be sharing key highlights from that great report that came out. So please join us for that webinar on Wednesday, September 10th, from 3 to 4:15. We hope that you will join our REI network You can join the REI network at our website at www.realeconomicimpact.org, and you can find out more information there. Once again, I'd like to thank our sponsors, Walmart, Bank of America, Accorda Therapeutics, Burton Blatt Institute, and the Internal Revenue Service. Please follow us on Twitter and Facebook and YouTube, and here is information on that you can access our social media sites. Once again, thank you to the Center for Financial Services Innovation for sharing information with us today, and we look forward to seeing everybody, having you participate on our webinar in September. Have a good day.
Thank you so much.